Hi, everyone. Welcome to this webinar hosted by TCV. I'm John Burke, an Executive Vice President with the firm. We're growth stage investors, and our goal is to share best practices and learnings from seasoned experts that we can share with our CEOs, founders, and other operators in the technology space. One of the themes we've been following closely is a new class of SaaS companies emerging as platforms with the potential to establish networks with either consumer, suppliers, and employees on top of their platforms. It's a theme we've been investing behind aggressively with businesses like Avetta, CCC, LegalZoom, Klook, Rover, SiteMinder, most recently Toast, and we hope to continue to invest more here in the future. We believe that once certain SaaS tools create density of supply, they can leverage their strength with existing customers and ultimately build relationships with other sides of the marketplace, strengthening their position. Few companies have been able to make this leap, and it's something that is not easy to do. But when they do, we think the results are a much stronger financial profile, a deeper competitive position, and ultimately a much larger TAM. Today, we're excited to have Brian Rothenberg with us to talk through the opportunity with his presentation, How Can SaaS Companies Successfully Transition to Marketplaces? Brian is a partner with Defy Partners, and he has been pioneering this concept for the last 15 years. Prior to Defy, Brian spent 6.5 years at Eventbrite in several roles, most recently Vice President of Growth and the GM of their self-service unit, where he helped them transition beyond just the event creator side of the business to also drive demand for the marketplace. He also worked with TaskRabbit, where he was able to 3x the business as the co-head of marketing, and he built his own startup SkillSlate in the home services sector. Without further ado, I want to welcome Brian and hand it over to you.
Thanks so much for hosting me, John, at TCV. So I'm excited to talk about some of my learnings throughout these various journeys in evolving from SaaS products into two-sided networks. But first, I'd like to reference a blog post that was very impactful to me. So Chris Dixon of Andreessen Horowitz wrote a post called Come for the Tool, Stay for the Network. And in this post, he posited that you can build a liquid network, which is often so difficult in balancing the supply and demand and trying to build that from the get-go, but build a software-based tool that helps to aggregate a fragmented supply base and then later layer on the demand side. And so one example that I really like is Instagram, and it's a classic example of this tool into a network. So originally, Instagram was largely a photo filter tool. That was the first app that was built out. The app also enabled users to post their photos to their social networks. And through this dynamic, a lot of people on these liquid social networks like Facebook and Twitter saw, wow, these are beautiful photo filters. I want a tool that does that as well. That then routed consumers back to Instagram to use the photo filter tool even further. And over time, sharing on Instagram actually became the default way to use Instagram. So over time, they actually built their own social network, which was thereby so threatening to Facebook, such that Facebook felt like they had to acquire the company. So more broadly speaking, this approach uses software to target, service, and aggregate a new or fragmented user base. And often with SaaS to marketplace, the initial SaaS tool is focused on the supply. So there are debates here. Some people say you should focus on the demand. My belief is really you have to roll up the supply as the first order. So as the SaaS tool starts to roll up and create a new density of supply, over time there becomes a shift towards connecting with relevant demand. And this approach has been leveraged by a growing group of SaaS to marketplace companies, a few of which include the classic example of OpenTable, Zola in the wedding registry space. Thumbtack built many software-based tools before building their marketplace. Paired, which is a vertical solution in the restaurant space. Wonolo, CarGurus, and other companies. But using an example that I know best, we're going to focus today largely on Eventbrite. So back in 2011, here's a post in the New York Times. Eventbrite was really a self-service SaaS business. So the headline here is Ticket Sales Startup Aims at Smaller Box Offices. So it was really building tools to help an often neglected base of customers, the long tail of people hosting events, better manage their events and sell tickets online. And back then, Eventbrite was primarily single-player software. So the model worked such that the company would acquire new supply. This is in the form of event creators, people hosting events. Those creators would bring their events to the Eventbrite platform, and they would then market their events to event attendees and saying, hey, come buy tickets on Eventbrite. So they were helping to recruit demand side in. But we believed that Eventbrite could thrive as a marketplace and more of a two-sided network. And so what we did over time is we worked to develop this demand acquisition piece whereby not only event creators were marketing their events to event attendees, but Eventbrite was marketing those events to event attendees, which created a virtuous flywheel. But it wasn't obvious at the time. So when I started interviewing in 2012, the final presentation I gave to Kevin Hartz, our founder and former CEO, was this title slide. So it was my belief in 2012 that we could fuel this marketplace growth engine for the business, but it was not at all apparent initially. So this is my summary slide from this presentation around why I believe marketplace is important. And there are a lot of words, but the key takeaway is, well, this isn't a comprehensive list. All of these ended up being largely true. So my intuition was largely right. A couple of these items that I've highlighted here actually ended up being listed as key strengths in our IPO prospectus about 6 years later. So the instinct was right. And over time, Eventbrite has done a good job developing growing marketplace dynamics. So the narrative has shifted from that prior article that I showed you to Eventbrite is building a growing experience marketplace and a leading ticketing consumer destination. But it didn't happen overnight. I think a lot of people look at stories in retrospect and you see an up and to the right curve and it must have been so easy and so well thought out. The reality is it's always much more difficult. So while my intuition was right, I truly underestimated how difficult it would be. So here today, I hope to share a few of the key learnings from Eventbrite and from some of my studies of other SaaS to marketplace businesses, and look forward to hearing John's thoughts on this topic as well. But really, I believe step zero before you even get going is to think through, is there really a need? And does enough demand actually want to connect with your supply? So one thing that we did at Eventbrite is we worked to validate or disprove that there was a big enough need and opportunity. And so we did this in a few ways. We worked to quantify external demand. So how many people are searching on Google? How many people are seeking out events on social platforms? We actually built a quantitative model to better understand how much demand there is in the market. And we got comfort with, okay, there's a lot of demand in existing discovery areas. We also did user research. So we talked to a bunch of event goers and found key personas that really wanted to find a better way to find live experiences. They weren't satisfied with the status quo. And we felt like this was a large enough segment of customers to build a valuable business. We then worked to build and test multiple prototypes. We actually formed a small independent team operating much like a startup, very independent of the Eventbrite main mothership. And using sort of lean startup principles, they built many different versions, tested, iterated, to try to build towards a minimum viable product. Leading to my next point, I believe strongly that you need the right products on the shelves or the right supply where people are looking. Like if you were to go into a store and there are no products on the shelves, you're quickly going to bounce. So want to avoid that. And some concepts that I think are very important. So I believe that you should focus on building narrow, vertical, and ultra-local networks versus horizontal and broad networks. This image here on the screen is a memo that was written in 2001 by an OpenTable board member arguing that OpenTable should stop selling into every restaurant that wanted their software and hardware throughout the country, but to focus on just 4 geographic areas and selling only into those local cities to build a network density of supply such that they could create a two-sided network over time. So really asking, do you have the supply in the most important categories and locations, even down to the neighborhood level? And with these types of businesses and the evolution, given that you need to fund 2 businesses in parallel, like really you have your core SaaS business and then you're trying to fund a marketplace business as well, I believe that you need to be hyper efficient in growing your supply and your demand. So I'll share a few ideas that we've worked on. So one core tenet is I believe that a self-service software model is a critical pillar for SaaS to marketplace. So a self-serve model can really drive cost advantages in the SaaS part of your business. So drawing from Eventbrite's S1 that we wrote, as you can see, our business model has cost advantages in creator acquisition and operations. So more than 95% of event creators, or our supply side, who used our platform in 2017 signed themselves up for Eventbrite on their own. So hugely powerful. Here's a post that I love by a friend of mine, a former advisor. His name is Gokul Rajaram. He's one of the product leads at Square. He wrote a post and argued that truly great software companies are self-serve first. And a couple reasons why. One is self-serve accelerates trial. So trial aids in distribution. If you can try the product and understand the value first, you're much more likely than if you have to go through a sales process to have the value communicated to you. It can also help you push into a greenfield space so you can find customers from substitutes versus competitors. An example here is a large chunk of Eventbrite's customers early on and even today were switching from pen and paper, spreadsheets, PayPal, an amalgamation of not perfect solutions, and found that Eventbrite was just a better cohesive solution. And they probably wouldn't have found that had they not been able to test it and try it via self-service. Also, self-serve software companies often act much like consumer in terms of acquisition tactics. So you can have referrals, promo codes, freemium, SEO, et cetera. And really, all of these things create a tremendous cost advantage for self-service SaaS companies that execute on it well. Here's a quote by Jeff Bezos that I really like, where he said in a shareholder letter, "When a platform is self-service, even the improbable ideas can get tried because there's no expert gatekeeper ready to say, that will never work." So he's a big proponent of all of Amazon's services being really self-serve and accessible so that people can find new ways of doing things. Self-serve can also help to fill out the long tail of supply and also can enable sparks of net new usage. And to bring this to life, Eventbrite started out self-service, but built purely for paid events. It was never meant to be used for free events either. That was not part of the founder's grand vision. But because it was self-service, early users started creating free events. They basically hacked the system. So instead of putting a dollar amount in the price field, they put $0 and they hosted and organized free events. And while a lot of companies could have rejected that and closed that loop and said, this is not, we're going to monetize every single user, the team actually embraced this spark. And really that was the initial spark for Eventbrite's early freemium model. And this is a chart of the free-to-pay conversion of our customers over time. And again, another key strength in Eventbrite's S1, roughly 17% of creators who have produced a free event go on to host a paid event within 12 months. That's a pretty high free-to-paid conversion rate. So while free is good, getting paid is obviously better. So these paying customers can really help to bootstrap the marketplace. So charging your supply for your software before you're even driving material demand is a great way to fund the company. And then as you build this marketplace liquidity, you can actually gain leverage and later charge for those transactions. So where you may charge your initial customers on a SaaS basis for using the software, if you're driving incremental transactions, you can actually take a higher rake of that component as well. So it can actually increase your monetization of the platform overall. A common misconception that I hear from founders discussing this is that initiatives they're working on fall squarely in either the demand camp or the supply camp. And what we found through our years working on this is that a lot of efforts that look demand focused can actually help to attract more supply. So in this example, we invested a lot in SEO. I helped to build our first SEO program and scale it at Eventbrite. But this search for San Francisco events, you'd think this is people looking for things to do, very consumer oriented. But what we found is that exposure in searches like this that are more consumer oriented actually help to acquire a lot of Eventbrite's supply. And it kind of makes sense if you think about it. If you're hosting an event yourself, you want to get distribution for your event. So you're going to go to Google or other sources and seek out who's showing up highly where consumers are searching, I want to be there. That's like the classic, you want to be where the buyers are. This is a fun early interview by Roloff Botha of Sequoia Capital, who led Eventbrite's Series A with Kevin and Julia Hartz, our two founders. And he said, during diligence, I cold called customers and asked, how did you learn about Eventbrite? Many of them referenced buying a ticket, being that spark of understanding. So what we found is that there was actually this great supply-demand overlap dynamic in that the supply often actually first learned about Eventbrite by a demand-side interaction. And as this played out over time, and we found ways to actually triple this conversion rate, which was a huge near-zero cost customer acquisition tactic for us, about 34% of our supply side actually learned about the platform first by being a ticket buyer. So again, drove dramatic organic growth with very low creator acquisition costs. So really, the key takeaway here is look for and invest in the areas that benefit both your supply and demand, because it can really provide leverage as opposed to doing things that just focus on one or the other. Look for that overlap. And as you aggregate this valuable supply, one of the key learnings that we found is others will want it. So Eventbrite drives sales through its own app, but also via distribution with our partnerships with Facebook, Instagram, Google, YouTube, Spotify, and more. So as you have this inventory that ideally no one else has, others will want it within their networks. And this contributes not only to actually selling more tickets, but the perception that Eventbrite helps me sell more. So this is really the classic network effects, right? The lock-in of, as you're helping your supply side sell more, it's harder and harder for them to leave the platform. So your retention goes up, as well as your opportunity to monetize those users. There's a higher willingness to pay to participate in the network. And one tip to think about as you're working towards building this network activity, which is very difficult, is you may have to do a little bit of fake it till you make it. So liquidity and network effects don't happen overnight. They take a long time, but you need to message to your supply side that it's starting to work. And this can really be a crawl, walk, run approach. So for example, you can show your supply side, this is how many people are searching for events in their area or in their category, right? Show some of that activity. Show how many profile or listing views or how many times they've shown up in search. Show how many people have saved their listings or even followed them as an event organizer, in our case, but whoever the main customer is on the supply side for your business. And then over time, tell them when you're driving more sales than the cost to use your service. So one of the early programs that I helped to pilot is we would calculate what the service fees were for a specific event that a creator were paying to Eventbrite, and we would know which ticket sales Eventbrite had driven. And we built a programmatic campaign whereby for any event where Eventbrite drove more revenue for that customer than the fees we consumed, we pushed that message to them. So we were showing them we are becoming a profit center as opposed to a cost center. And that was very, very well received and very material in helping to show network liquidity. I think LinkedIn does a great job of this. They're obviously a very liquid network today, but they did a great job early on of showing here's who's viewing your profile, here's who's following you, etc. I think people can look to them as a good example of how you might get started in this area. Okay, so if you've thought about it, you're ready to make the shift, I want to give you a few heads up. So one is that your supply base is likely to get upset when you start, quote, marketing to your shared consumers. They are almost certainly going to have a strong perspective that their customers are their customers and they're not yours, and you shouldn't be having a relationship and communicating with them. So as an example, with Eventbrite, here are some of the paraphrased quotes we heard. Take your logo off of my event listing page. What the heck are you doing emailing my customers recommending other events? Or even on a customer's event page themselves, wait, you're recommending other events on my page? These are things as operators and investors we see all the time, right? Like you go to an Amazon listing page, of course you're recommended other products. But for customers who feel like this is my product, my page, it can be a little bit off-putting. And what we learned is, yes, you need to listen. Yes, you need to learn. I don't mean to be too dismissive here, but that you can't overreact to an angry vocal minority, because it was really a minority. And most people, when they understood that the value of participating in the network is greater than potentially having some branding impact or losing a couple customers, they were generally okay with it. And really, you can't be everything to everyone. It's just impossible. So my tips here are do it gradually over time. So in one example, I showed you the logo on the prior slide, the Eventbrite logo at the top. We progressively increased that logo size over the course of months and years until the point where we felt like we had good branding, but we didn't do it overnight. And then again, communicating the value of how their participation in the network is actually a net positive, like that example of going from a cost center to a profit center, can really help with this. I like this visual because to me, it really articulates the point that you have this core business, this SaaS business, and it's just this unrelenting pull where it wants to suck in all of the resources and investments and reinvestments for the business. And really, your marketplace efforts are in this case, this exploratory astronaut, and he or she wants to keep getting pulled back into the core SaaS business. And so what we found is you can't do it. You have to carve out resources to invest in the marketplace efforts. We went through periods of people juggling, spend 30% of your time on the marketplace efforts, 70% on the supply side. And it just didn't work very well. Like you just keep getting pulled back to the supply side. So what we found is that a CEO directive, our CEO, Julia Hartz, said, marketplace is a thing. We are doing this. This is a strategic imperative. Everyone get on board. And then an org structure that helped to facilitate that and the focus was really critical. So what we did over time is we broke out a separate sort of demand or marketplace division within the company. They were staffed with their own resources from product to engineering to analytics to marketing, et cetera. They were really a standalone BU, and they had the autonomy and the authority to build what they needed with the resources they needed to push and prove into that business. The classic supply side business, which was the incumbent B1 of Eventbrite, had its own business unit with its own goals. And then underneath, there are shared services. So we had a platform team building for both sides and sort of all of your core other functions.
What were the specific sort of resources that you needed on your demand marketplace team in order to set that up for success?
Probably the biggest piece was dedicated product and engineering. So as we're iterating towards getting the right product that meets the market needs, that was one key one. And then, as I mentioned before, there was overlap between your supply and demand marketing efforts, like the SEO example, but there were other things like content marketing to consumers that really needed its own team. They were always thinking about, what do consumers want to read? What do they want to consume? So those were a couple of the key examples. Furthermore, while we had a sales team for our sort of upmarket part of the supply side, a sales team is largely irrelevant on the demand and marketplace side. But what is important there is partnerships people. So talking to Facebooks of the world, talking to Instagrams, forging those partnerships where we were able to distribute our events into those other networks was critically important. And then just to wrap, patience and persistence are key. This cannot be successful without both. So I think anyone joining us today knows that marketplaces take a long time to hit their inflection points. They often look like they're growing linearly until they hit that liquidity threshold and start to inflect. So it could take 5 to 10 years for your SaaS business to get to scale, which I'm calling Act 1, and another 5+ years for the marketplace to really, really kick in and hit that inflection point. So having the patience and understanding that this is a long game is important. But really, I've seen it happen with the right approach applied consistently over time. It can be done. So if you believe this is right for your business, if you see this future vision, my advice is to stick with it and persevere.
Thanks, Brian. That was a really great, impressive story, impressive impact you've had. Love to just dig into a few questions if you could. I think one of the things that might be on people's mind is when to make this move. And so in your opinion, if you have a SaaS tool and they're thinking about leveraging a network on top of that, what's the density needed? What are the attributes needed? What are the unique aspects that you think are critical from a timing perspective and from we're ready to set this up for success? And when should folks, begin to think about, leaning into this?
Yeah, I think it's unfortunately one of those it depends answers, but a couple of things that I've seen. One is the activity already happening organically on the platform? Like our consumers or the demand side coming to the platform to engage in the supply, that's a great signal that there's a there, right? If you're seeing it happen organically. Things that you want to be thinking through are, do you have enough supply in a given market or category such that anyone coming to your service would have a reasonable expectation of finding what they're looking for? It's sort of a soft qualitative measure for that. You can do the same thing and measure that quantitatively in that if you build out sort of discovery or browse pages for your supply, you can see how many visitors end up looking at a listing versus bouncing immediately. And of those that look at a listing, how many look at one or more, and then how many go through to transact. So you can create sort of upper funnel metrics to understand signal, at least around, are people finding inventory or supply that they find interesting? And then of course, are they proceeding through to transaction, which is the goal in these two-sided networks.
Yeah, I've always thought about it in the context also of like leveraging your strengths. And part of it is, as you mentioned, sort of making sure you have that, unique lead in order to leverage that strength. As you think about leveraging those strengths, are there other attributes that come to mind on that front? I kind of think about it in the context of if you can make it a win-win for both, and you touched on an earlier slide where it's, often it's, you're going to drive more demand, you're going to, fill the things that they care about in terms of closing more transactions or having more sales. And so can you just bring to life some of those other attributes in terms of leveraging your strengths to make it a win-win?
Absolutely. Yeah, that's a great point. So one exercise we did, and this was in the period where we didn't have the separate marketplace division, but we had people trying to balance both. We created lists of strategic initiatives and tactical areas that nested under those. And then we categorized them by, does this purely benefit supply? Does this purely benefit demand? Or is there overlap? And does this conceivably benefit both?
Yeah.
And what we really tried to do is do more of the things that benefit both, because then you get lift on both sides theoretically. And, it was an okay way to tiptoe our way into, is this really the bet that we're going to make?
Yeah, that's interesting. I'd also sort of love to hear a little bit more about your leading indicators for success. I think I found from my operating days that oftentimes the metrics that, we investors could focus in on, whether it's revenue or customers, can be lagging in a lot of contexts. And as you mentioned in a few of these slides where it's not an easy transition and it's hard. And so what were the metrics that you sort of think about that gave you the conviction that continue to have you push through and why this matters?
Yeah. I mean, as investors now, be on the side of the table with you, we care about revenue and other lagging indicators, but I totally agree. You need early signal up front. So I think it can be qualitative and quantitative. So understanding, again, qualitatively, are people looking for the solution you're trying to provide? If you talk to 10 people, do 4 or 5 of them say, hey, this is a burning desire, this is a problem for me. From there, I think it's looking at, are we seeing this organic activity today? What is our existing sort of match rate of supply and demand? How is that trending over time? What growth are we seeing on one or the other? In markets, it might be in a geography where we have more inventory. Are we seeing greater connection than markets with less supply inventory or less effort driving demand? And then as we start to see signs of liquidity, are we seeing some of the lagging indicators that we want to see? So this could be like, is retention going up when we're making more of these connections? Is there less price sensitivity because the supply side is really feeling the demand that we're driving for them? It really flows through the system, and there's no right approach for all companies, but I would think through how would you back up the funnel from the lagging indicators and understand, well, which metrics higher in the funnel are predictive of the end outcome we're trying to achieve, and then how do we drive those?
Yeah, that's super, super helpful. It sounds like within the team, there was a whole bunch of debates of should we do this, should we not do this? I'd love to just, if you could bring some of that to life and how people thought about the two sides of those arguments. And then ultimately, we think that this is incredibly powerful from the benefits they can provide. But in your mind, for the strategic initiatives and imperatives that you guys wanted to drive, like why to you is it worth, the 5 to 10 year journey that you went on?
Honestly, it looks so clear in retrospect in the rearview mirror, but it was not. There were periods of time where we had big goals. We wanted to become a profitable company. We had plans to go public. We needed to scale revenue into $100 million plus to achieve that point where we could go public. And then trying to bolt on another new business on top of that is incredibly hard. And so during annual planning sessions and strategic meetings, I remember being in the room with other executives, and we had vigorous debates. We would actually go to voting to see where people's heads were at. We would debate all the pros and cons, the merits, the trade-offs. Ultimately, I give a lot of credit to Julia Hartz, our CEO, who made the call. She said, this is the vision for the company. This is the big bet we believe we can make. There's probably a faster path to near-term revenue by pursuing a purely supply-centric SaaS or platform solution. But no, here's where we're going. That's how we'll create the most lasting, enduring, long-term value and the biggest independent standalone company over time. And so sometimes you have to draw a line in the sand and say, we're doing this, and everyone got on board. But it was not easy. I'll share a few examples of some of the squeaky wheels. The sales team, for example, love our sellers, love our salespeople. But, if you're telling them, okay, your quota is going up because we're not investing in hiring a ton of new sales heads next year because we're taking that money to build this nascent marketplace business, I can understand that's a hard trade-off, but it was one that we made and was very important for the long term, but really some short-term pain in getting through that. And there are a million other examples, but that's just one.
Yeah, super interesting. We tend to think about it in the same context of, we want to have companies that can be category leaders over the long term and dominate. And sometimes you need that patience to achieve that long-term vision. But if you can get there, you're in a much stronger position, much bigger market opportunity, harder to disrupt business. And so really, really fascinating. Anything you would have done differently starting this over? What are the things that people should keep in mind that you wish you would have known on that journey?
I think I wish I had known earlier how difficult it is for the same human being to juggle both the supply and demand sides. And of course, there are areas that benefit both, but when they're truly disparate and so different, creating the focus and the very focused team, even if it's a very small team to start, was one of the best things we did. And I wish we had done so sooner. That's one. I think, it took us some time to realize we had some marketplace expertise in-house, but we really needed to bring on the right people who had this outside thinking and had the marketplace muscle. And so we brought on a great advisor named Casey Winners, he was the first marketer at Grubhub and helped to build their marketplace. He was at Pinterest as the early growth lead, and he came in to help consult and actually spent a few days a week with us on the marketplace side. And so we were sort of peers. I was a little bit more focused on supply. He was more focused on demand, but injects the organization with that new and different way of thinking that was critical for us to push through and make a lot of progress.
What was the other sort of building up the team and the must-have skills and DNA? What were your first few hires that you needed with you on the journey?
We took an approach of hiring for the areas where we were seeing pull and seeing traction. So I mentioned earlier SEO, we built out that organization, and that was benefiting both the supply and demand side, but it was probably stronger on the demand side. And so we built out a team of experts in that area. I'm passionate about it, but I tried to hire people smarter than me to really push us forward. And we just kept finding areas where we were seeing organic traction, and we would test our way into it. Okay, if we add a couple resources here, can we accelerate growth? If yes, add more, really test your way into it. And again, it's over time as the company gets bigger, hire the vertical experts to push forward those areas better than any generalist could.
What about some other companies that you admire? You spent 15 years mastering this. Who are the other companies that our executives, operators, CEOs could learn from?
Yeah, so one is having spent time in the local services space, which is a tough space. I really admire the Thumbtack team. So I've known the founders for almost 10 years. We started at about the same time. And their approach was really to build software tools for home services professionals that worked independent of having to have the demand side in place already. And it was a big bet. So they built this big base of supply. They had tools for them, but they didn't yet have a lot of consumers, but they kept beating on the demand side over time. And it was like at one point they hit an inflection point and the demand was coming in each local area. And they built, $1 billion plus marketplace out of that. But it was a big bet, and it wasn't always clear that that was going to be the right approach. But honestly, it was much more successful than my own company's approach. So I admire them.
Thanks for that, Brian. Anything else you'd like to share?
Just that I love this space, very passionate about it, having spent a long time in this area. And, this is a theme and a thesis that I care deeply about. And my firm, Defy Partner, does as well. So we'll be looking at this from the earliest stages and trying to find and help great entrepreneurs along this journey, as I'm sure TCV will, as you all see these companies achieving scale.
Yeah, no doubt. We're very passionate about this as well, and very grateful for you today to be able to learn from you. And so we hope everyone today enjoyed this webinar. If you need any more information, please check out more of our content on the TCV website, tcv.com. Thanks so much.
Thank you.